All right, so I just finished showing my clients a house at 2425 South 12th Street, and they loved it. So I said, let me call the agent and make sure it's still available because sometimes the decision is made for you in this kind of market when there are multiple offers on the table. And they wanted to go home and also think about it based on the school district and whether or not they were ready to make a move because she's expecting her second baby in June. So I said, let me call the agent and find out what the situation is. So I called the agent and he said that the seller, there were no offers on the table. So I asked, are there any offers on the table or expected? He said there were no offers on the table. One was expected, and there were two other showings after ours today. So I asked, what was the seller situation? Are they, moving into a home, or do they need to find a home? So he said they're looking to settle on May 23rd, and today is March 18th, and they were hoping to rent back their property from the new owners for a couple of weeks. Since my client has a more flexible time frame, since their home is not yet on the market, and they might be able to buy this home without selling their home, I asked them, well, what's the longest time they might want? Thinking that my clients might actually enjoy having that overlap. And somebody might be up against the end of a lease or might not be willing or comfortable to have the seller live in the home after they close. So I was looking for any way that we could be competitive if we're going to compete with other buyers. Another thing that makes my client competitive is that they will not necessarily need a seller assist, and they will probably be able to put 10 or 20% down, and they're not first-time home buyers, so that means that they've owned a home before, so they know what home ownership is like, and they're less likely to get upset at the home inspection. Renters have an advantage in that they might have a flexible lease and they don't have a home to sell. So if my clients can come up with the money to buy without selling their home, that would be better for them than to have to make their offer contingent upon the sale and settlement of their own home. So the first thing I want to show you here is how to do a closing cost estimate. And first, to make your life easy, let's have you go to Trend, go to Finance and Statistics, and I want you to go to the buyer closing costs. And from there, we're going to go to your preferences so that you can set up your default preferences. And that way, every time you do a seller assist, or excuse me, a closing cost estimate, your default values will be there. Because when you work with a lender, typically the charges are very similar across lenders. And if you have the specific lender's costs, you can always put that in. And yet I find it easier to just have my default costs that I know are pretty typical. So once you're in this section, you should see the company logo. You can skip the property information section right there. Under mortgage origination costs, you'll want to change yours to the appraisal to say 450, credit 25, document prep 1,000. So this is kind of a catch-all category because each lender might call it something different, and they might have it broken out into two fees, not one fee. So some companies will call it an underwriting fee or an application fee, and it might be $895. So I just use 1,000 in this category as a catch-all. Underwriting, you could say 0, flood cert 25, tax escrow 93, and then these three can be 0. And then title insurance, where it says survey, you can have it as 0. Then under other closing costs, you'll want to do $257 for the deed, $227 for the mortgage, $60 for notary, commission paid by buyer, because that's going to enable you to hire Sarah Cadman to create the timelines and communicate between all the parties during the closing process. And we will talk about how to include that on your buyer and seller agency contracts and also how to present it to the seller or buyer. Home inspections, so the standard home inspections that I recommend typically cost $400 for the regular home inspection, $100 or less for termite, $150 or less for radon. And then in the city, I always recommend this fourth inspection that not many people do recommend. And that's because if you have a 100-year-old cast iron sewer line under the sidewalk, it could cost $4,000 to $6,000 to replace that. And you don't know those are cracked until they're cracked because what happens is the methane gas rises to the top of the cast iron, it starts to split at the top, and then because of the pressure of the sidewalk above, it just collapses one day, causing a huge issue. So for $300, your buyer can scope it out, make sure there are no visible cracks, and if there are, they can negotiate possibly a credit or replacement with the seller at the time of the sale rather than being surprised about it later. All right, so now you want to scroll down and under seller's net sheet, so this is where you set up your seller's default closing costs, you got 6% and $4.95 right over here. And then down here, so the notary fee, I always just put 100, even though it might be 20 bucks. If they get a power of attorney or a deed package and they don't have to come to closing, this fee might be 100 or a little more. Certifications, so you'll be ordering on behalf of your seller client the L&I or licenses and inspection certifications stating there are no uncorrected code violations on the property. So that's $112.45. So you can either have your client order it and you can show them how to do it online with their credit card, or you can order it and have them reimburse you at closing. And then lastly, it doesn't cost your client anything to order the home warranty within 2 weeks of signing the listing, and it protects the seller in case anything happens during the listing period. So what I tell my clients is, I'm going to put this home warranty in place for you. You don't even have to pay for it until closing, and only if you've negotiated with the buyer to include it. And in the meantime, if something goes wrong during the transaction, like the toilet breaks, perhaps for a small deductible, you can actually get it fixed by the home warranty. So it's really a win-win all around. So now that you have that done, you just want to hit save. So now you're set up to, create great closing estimates for buyers and sellers whenever you are doing that for your client. So the way I like to get to the closing estimate for my client on a specific address is just go to search and then the address. So I'm going to type that in. And 2 matches come up. One's in Philly, one's I believe in Camden. So I'm just going to do that. Let's see, what are we at? 19148. And then I'm going to hit results. Now I'm going to scroll over and I'm going to actually have to move this. See this symbol over here that says B $? That's for the buyer closing estimate. So whenever you're doing an estimate for your buyer client, you'll want to click on that and then fill out all the information. If you're working on behalf of the seller, then you'll just hit the S with the $, and you'll get to the seller net sheet. So since I'm working on the buyer side, I'm going to go here. Okay. So let it think and gather its information. So you'll notice that there's certain fields in yellow and certain fields in white. So I would put the buyer's name up here. And I always start with just using the purchase price, so $325. I'll pick the settlement date that the seller requested, May 23rd. And then a couple of prorations are going to be pre-populated at the bottom of your screen below where you can see right now. Seller assist, I'm going to leave blank for now. Earnest deposit. So I'm always going to assume that if my client's putting 5 or more % down, that they're going to be putting 5% down as earnest money. So 325 times 0.05% is $16,250. So because they're going to be putting 10 or 20% down, I'm going to let the buyer know that the seller will expect them to put $16,250 with their offer and within 18 days of the signing of the agreement. So essentially, a first deposit of about $1,000 to $2,500 and a second deposit, which would be the balance of the $16,250. So I will just put in $16,250 here. And especially if we want to be competitive, we might make the first deposit $5,000 and maybe make the second deposit $15,000 to show their commitment. So this is where I'd pick the loan type: cash, conventional, FHA, USDA, or VA. Most likely you're not going to use USDA, that's a rural kind of loan. And FHA 203B, that's your typical FHA loan. There is another kind of FHA loan, 203K, which is a renovation loan. And that involves a little bit more intricate details with the closing estimate that our system is not great at doing. So for now, we know they're using a conventional loan, so I'll pick that. Oh, and of course, if they're paying in cash, you select cash. All right, so I'll do my first estimate at 20% down, and I'm just going to estimate 4.5. So if I know the rate today is 4.25, I'm always going to increase the estimate by 0.25. That way, if the rate increases, then the buyer agrees to pay the higher rate in the contract. So they can't just terminate the contract because the rate went higher. And that's, to protect the seller who might have already made moving arrangements. So now I'm going to scroll down and you'll see that everything that I need filled out right here is already filled out for the mortgage. Title is based on the sales price, so that's already filled out. Over here under other closing costs, my transfer tax, deed and mortgage and notary and commission, those are all filled out, and all my inspections are filled out. The only thing that you need to do in this section is make sure that you put in for insurance. So they're going to prepay 1-year homeowners insurance at closing, and I'm just going to call it $1,400 based on experience in this home. And we write unpaid because that means that by the time they get to closing, they will not have paid that homeowners insurance policy. At closing, they'll pay it. Anytime you see prepaid, that means that they'll pay it before they get to closing. So they'll have prepaid their appraisal by the time they get to closing. They'll have prepaid all of their inspections by the time they got to closing. And then we scroll down here, and for whatever reason, the system does not like to cooperate with the homeowners insurance. So I'm just going to delete the 2, tab over, and then it's going to fill in 2 months, and it's going to bring in the information from above about what 2 months of their insurance policy, what that's worth. And then the reimbursements to the seller, so municipal taxes, school taxes, that should be filled out correctly. One note here is the condo HOA. So normally the condo HOA, if there's, let's say, a $300 monthly condo fee, usually you're reimbursing the seller through the end of the month or whatever period has been paid. For whatever reason, this system sometimes will say the seller is paid through the end of the year, and this will say thousands of dollars. So you just want to make sure that these numbers look correct. And, I'll go through your first couple with you so that we can look at it together. But just know that this section can be a little funky sometime. All right. And so I'm just going to hit save. That way I have a basis for this one. So I'm just going to call it 20% and the address. And I'll type in my client's name, and then I'll save it to them. So one thing I like to do is also I like to print it as a PDF because I'm going to send them a couple of scenarios. So I'll print a couple PDFs and send it to them in an email. So I'll hit print. And then you'll notice there'll be another print box that comes up. So in order to make it go to your printer effectively, you have to print again and then hit save. And so I always like to name things according to the address, and I also like to call things what they are. So CCE is closing cost estimate, and I like to label things to reflect what they are. So I'll just save that there. And now I'm going to go back, and now it'll take 2 minutes, not even 2 minutes, to create a couple different scenarios. So if I wanted to see about them just putting 20% down and getting a seller assist, I'm going to do some quick math to see how much their closing costs are and then subtract $1,800. Now, I don't have time in this video to explain all that, but just some basic calculations is showing me that I could probably include, let's see, 14, 15, about a $16,000 seller assist if I wanted to, and they wanted to finance some of those closing costs. Now, knowing that this property is popular, I'm going to add that $16,000 to the top of their purchase price. So that would be $341. And then of course we have to make sure that the property will appraise for that amount. So I'm going to hit print again, and I'm going to hit save. And then I hit that, and then I say with assist, and I'll save that. And then lastly, I'm going to delete the assist and see what it would be if they put 10% down at the original $325 purchase price. So now you see mortgage insurance comes into play, and yet they'll need so much less money down. So if I can wrap this up in 30 seconds, I'm going to show you the difference between 10%, 20% with and without an assist in terms of the money needed to purchase. So with 10% down, the total funds needed per purchase is just over $50,000, and $1,970 is their monthly payment. With 20% down and no assist, it's